Good morning and welcome to the market forecast for Wednesday, March the 24th. My name is John Hoagland. Thanks for trusting me with your time this morning. If you're in the markets, hopefully things are going your way already. As always, we are hoping you are keeping a consistent context over the marketplace and focusing on risk management first. As far as economic numbers this morning, 7:30, the durable goods orders came out. They came out a little bit lower than expected, but there were some positive revisions to the last release. Not much of a knee-jerk reaction or a reaction at all in the markets to the durable goods orders this morning. It may take a little bit of time to digest that information. At 8:45 Central this morning, we have the PMI Composite flash numbers due out. 9 o'clock, Powell and Yellen resume their testimony. And at 9:30, the EIA Petroleum Status Report is due out. There are also a handful of other talking Feds that are going to be speaking at various places throughout the day today. As far as news is concerned, the news is saying the tech sector is leading U.S. stocks to a higher opening today. Powell stated yesterday that any inflation this year is likely to be more of a one-off and that the central bank can manage it. Janet Yellen says that some areas of the market are richly valued yesterday, but no concern of financial instability. So I have a feeling that downturn that we took in the equities yesterday may have something to do with Yellen saying that some of the markets might be richly valued. So you got to pay attention to the words that they say. I always think back to when Alan Greenspan said that he was seeing the stock market at the time as an irrational exuberance. And as soon as he said that, the market turned and tanked. As far as crude prices are concerned, we've get a surge back above that weekly kickoff level that we broke through yesterday, I believe. Apparently, there is a ship aground blocking the Suez Canal. Apparently, it's a large container ship, so perhaps a little bit of supply issues as long as that ship remains blocking that area and running aground. As always, make sure you like, share, comment, question, feedback, and heckle at will. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. As far as the VIX, the dollar, and the 10-year yield, VIX is down about 1.6% this morning. Last time I looked, trading at 1996. The dollar index up a little bit this morning, trading 92.45. And the 10-year yield kind of flat from the close yesterday at 1.63. As always, love to say good morning to everybody. Brian D., first one in the room, you win the prize today. Josh Young, good morning. Murph, good morning. Great day for trading. Yeah, we're supposed to get rain here today as well, Murph, but so far it's been a kind of a sunny morning where I am, so it looks like some transient storms going through the area. D. McGregor, good morning. Bill Phillips, Clarence, James, Michael, level 2, good morning. Jason Cargill, Buenos Wednesday. Clarence, hit the target overnight in step 2, feeling grateful and accomplished. Nice job, Clarence. We're all very happy to see your success in the trading combine and looking forward to that continuing in the funded account. Make sure you remain humble, grateful, and accomplished and creative. We always like to say when going from the trading combine to the funded account, dance with the one you brung. Keep your strategy that puts you there in play. Repeat ad nauseum. Build that account. Good job. Good morning, my brother Rick, Laura, Felix, Adam, level 2. Felix woke up late this morning. Yes, maybe up perhaps a little bit, huh? My goal today is to stay patient and wait for proper setups. We say it all the time. Stay patient. Stay patient. Sometimes the best trade locations come later on in the day. Be patient, wait for those good trade locations that allow you to manage risk. Always looking for those cheap trades. Good morning, Rob T., Will Doherty, Angelina. We are not rejecting you, Angelina. I am so sorry about that. I'm going to put the link in again for the group coaching today. Hopefully this one will work for you. It should not. block you out. Maybe there was something wrong with one of the links that I put in here yesterday. And we're going to have Dan here tomorrow morning for the market forecast. So Dan has more of a finger on that Discord channel. So maybe he's going to be able to help you more. As far as I understand, it's an open channel, and if you find it and just link up to it, you should be able to get in there. And I apologize, Angelina. Again, I assure you, we are not rejecting you. We would never do such a thing. Charles, Shady Trader, good morning. Good morning, Joseph. The chef is here, Mike Magallanes. There are soccer fans out there, level 2 is saying it's most susceptible right after scoring. We see that a lot. We have traders that'll put up a really nice big trading day. We know that they're feeling good. They're happy about it. Quite often, some of their worst trading days come after the day after one of their best trading days. So just keep your feet on the ground, stay humble. And every day when I sit down, no matter what I did yesterday, no matter if I had a good day or a bad day, I start every day from zero as if it's my first day. I think that tends to keep our risk a little bit more manageable because that big day you had yesterday is yours, and it is not yours to play with. It is not yours to give back to the markets. It is yours to protect. Keep that system going. Kevin Scott, good morning. Do you find past settlement price to be as important as unchecked points of control? It's an interesting question. One of the things I think we're going to be talking about in the group coaching this morning is what settlement means, like on the open, when we open far away from settlement, we kind of view that as an inventory in shorter time frame traders that is more likely to get out of those positions and take price back towards settlement. In the longer time frame, the unchecked point of control is it's just amazing how visual markets are, Kevin. Then the unchecked naked point of control is always a target for price. The reason it's a fair price from a past session. The market is always going to go looking back to those fair prices for more information, to see if there's any more business that needs to be done there. We saw this week, I think, in the S&Ps, I think it was Tuesday, maybe Monday, I think it was that big update. We'll take a look at it on the charts, where we basically rallied all day until we hit the TPO point of control to the tick. And then the market finally turned and had a little bit of a pullback. So we'll see if we can't find that here this morning. Michael, happy hump day. Mr. Shine, good morning. Jonathan, John, Trading Research, good morning. Where I got lost here. Alan, good morning. Vigilante. Keith, good morning. George, going places. Oleg, I love when I see new faces and new people saying good morning here. We just love it when we get a chance to kind of communicate directly to each of you. Oleg, Nicholas, Andre. I'm trying to remember what this name is. I know it. It will come to me. Angelina Viol Falls. Powell testifies at 8 a.m. today. 10 a.m. Did you say 10? 10 a.m. today, Eastern time. 9 o'clock Central. And the best day can come after the worst day. Absolutely. There's nothing that says that anything that happened tomorrow is going to happen again today. 100%. Why we need to survive to come back the next day. Always trade for tomorrow. France, good to see you, France. I haven't seen you for a while. It's great to see you. Angelina, let me know if that link worked for you today. You should be able to register for the group coaching tomorrow. Let me know. And as for right now, why don't we go ahead and take a look into these charts? As always, I tend to start with the daily and crude. Let's take a quick look. Okay. So we had a pretty big move to the downside yesterday. API came out with a boost of 2.9 million barrels. The EIA is expecting just a meager 300,000 barrel draw. So the EIA may not be that important today, but very often they do seriously miss the expectations. Yesterday was a pretty good volume on the way down, but we lost 20,000 in open interest, and most of that was in the June contract. So does that tell us that maybe we started to see some long liquidation or maybe some profit taking from further back? It's very interesting that it happened in the June contract, not even the May, June, not even the May contract. It was most of the losses in open interest were in a future month. I find that to be very interesting. So the Suez ship being blocked today, that's important information for us. Of course, it's got the shorts on the run here, if there are any, and we've got our price back above 58.80, that weekly kickoff level that was supportive the end of last week and the beginning of this week, or yeah, but basically the end of last week. I registered, but the email had a link that said you were in another meeting. Very strange. Very strange, Angelina. Huh. I'm going to look into that here very shortly. Let's get through the charts here. So I'm going to be looking at 58.50 as somewhat pivotal today. It was supportive. We would be looking for this close below it to mark acceptance below it, but with new information, we've got a whole new situation going today. Looking here at the 30-minute chart, the settlement price down here at 57.76. We could look at this and be saying, well, with settlement down here and most of our activity pushing price higher, we may be holding some short time frame longs from the overnight kind of weaker hands traders. If they manage to hold price above 58.80, it may be enough to get some of the folks that got out yesterday back into the marketplace. So I'll be watching the opening range. We're in the center of the value area from yesterday. So like level 2 says, I'm going to be patient and look for the right opportunities today. If I go looking for trades, I'm going to find them. We're gonna find them, and again, I'm gonna suggest trying to stay a little bit patient. We're waiting for EIA. We're centrally located. As far as value is concerned, there's very little change to the perception of value of a barrel of crude oil. So I'm going to stay patient and see what the numbers come out, see if it gives me some opportunity. Perhaps at weekly kickoff low 58.80 might be an interesting spot, but there's lots of short time frame levels around. If we're going to continue to move this market higher, guess where our potential move is up to? Point of control from 2 days ago. This is a kind of a wide point of control. It wasn't a very busy day. There was a lot of activity at the point of control here. So it's almost the same as settlement, but it's more the point of control that's going to be dragging price up there if indeed we do break out the top of value and continue to this move to the upside. So watch and see. Watch and see. And, even if you don't participate, if you're interested in finding out, how often naked points of control get revisited, if we take out the high of the value area from yesterday and we become a little bit directional to the upside, this would be an excellent target for a long. E-mini S&Ps. Okay, so here we go. Let's make this big so everybody can see it. Weekly kickoff lows, pretty far away. We're pretty centrally located inside these ranges. Now we've got a shorter time frame range that we've kind of fallen into here, and we're centrally located inside of that as well. The downside volume yesterday was pretty good. We did add 8,200 in open interest to the downside, but I don't think we closed I don't think we closed that bad. So, I'm probably going to be suggesting being patient. I think we're going to be inside the value area from yesterday. Let's take a quick look here. So here's settlement down here, 38.99.75. Here's the Monday that we were talking about. Now, if we were to look at the TPO charts, and maybe we'll do that, Monday we opened in range and value, but we found buyers right away. We took out the high of value. We took out the high of the range from that day. Once we did that, the next highly probable target for this move is point of control from this naked point of control from a couple of days before. Now, looking at the TPO chart, let's see if we can get a view at this. Come on. Okay, so here was Monday. Okay, we open in range. We take out the high of value. We take out the high of the previous day's range. The next target, point of control, naked point of control. It trades right to it, to the tick, runs out of momentum, and then turns and closes relatively central in the entire range, still in value. So that's how visual these points of control, naked and prominent points of control, can be. Let's take a look at the Nasdaq now. Oh, don't forget again, the testimony is continuing today. Anything they say can and will be used against the markets. The Nasdaq continues to try and tiptoe to continue to test the weekly kickoff high, which is 13,170. If we accept above that, I'm going to call that a market state change. We had a directional longer time frame move to the upside. We had a shorter time frame move to the downside. We've fallen into balance. Acceptance above that level puts us, I think, in a new move to the upside. That's what these weekly kickoff levels are for, because I believe they're going to kind of push longer time frame traders to adjust inventory, and a hold and an acceptance above that level, I believe, may increase the probability that the longer time frame is going to adjust their inventories to less short or more long. We got to see if we get to that level here today. Volume and open interest yesterday, pretty decent volume, but open interest only added 1,100. I'm kind of viewing this because it was kind of a down day and not a big change in open interest as somewhat moot today. Let's take a look at the 30-minute. Settlement all the way at the bottom of yesterday's range, 13,006 and a quarter. We are holding some overnight longs here, but we're again in range and in value. I'm going to suggest again trying to stay patient. When we open this close to the center or the point of control and in value, better trade locations tend to come as the day goes on. There is no definite rule or way to know that that's going to be the case. It's just a higher probability when we open in range and in value that the better trade locations are going to come later on. Case in point, yesterday we opened here in range and in value from the previous day. Better trade locations came an hour and a half, 2 hours into the day when we got a pretty close look at weekly kickoff high. This would probably be the best trade location of the day. And again, it was an hour and a half, 2 hours after the regular trading hour open, the move to the downside comes. And, if we were looking at this as a possibility, and it was a little bit short of weekly kickoff high here to really get into a good trade location against that level, it would probably been more risk than I would have been able to look at. But when the market when it turns, we failed to take out the high of the previous 30-minute bar. That's an opportunity to take this as an opportunity for a cheap trade, and then we can maybe catch the ride to the downside. So we're in a very similar situation, even almost in the same place. Still inside the value from Monday, inside value from Tuesday. A lot of folks waiting for the information that may be uttered by Powell and Yellen today. Be careful. Watch the overnight high, watch the overnight low as possible extremes for today. But I'm going to, again, stay patient and not go looking for trades early in the session today. Gold. Sellers have, at least for the time being, won at weekly kickoff high. We've had 1, 2, 3, 4 days that tried to get above it. Remember, part of our job is to think about what the market is trying to do and how good of a job it's doing getting there. We had enough buyers to hold market up here, but yesterday we broke out below this trend line, and I'm viewing this break of this trend line not as a market state change in longer time frame, as a more of a potential for the market to kind of start to balance between weekly kickoff high and weekly kickoff low. Of course, another view at weekly kickoff high might be just enough to exhaust the sellers that have been keeping the price from getting up above there. So I'm going to, again, be looking to stay a little bit patient here. Volume was just okay yesterday. Open interest, hints of new sellers below this level. It wasn't tremendous? No. I mean, look at the volume. It wasn't great for a breakout type situation. It's part of the reason I think the market is more going to kind of remain a little bit range bound here for the time being. Of course, anything news can change that, anything in these markets in a heartbeat. Take a look at the 30-minute chart. The market opened. We initially left the opening range at the low of the session. I'm not sure if that still remains, but we had some overnight longs here. We start to see some shorter time frame higher highs and higher lows in this situation. But again, I'm going to be trying to stay a little bit patient. If I'm looking for longs, I'm going to probably look for a move back closer to point of control from yesterday or even settlement. Our overnight low is, of course, pretty close to the low from yesterday and pretty close to the value low from yesterday. This looks like a pretty target-rich environment down here, if even given the opportunity. So, I'm going to, because we're in range and so close to value and we don't see any directional activity happening so far, I'm going to be patient and see if I can find trade locations as the day goes on, focusing on the extremes of the regular trading hour session. Finally, we get some activity in the euro. We added 1,800 on the move to the downside yesterday, which doesn't impress me that much. We had a pretty good uptick in volume on the way down here. This is a potential continuation of acceptance below weekly kickoff low, that 118.50 level. The dollar strength keeps the downward pressure on this market. At the short time frame extremes, that's the weekly kickoff level here, as well as the balance area that we've been here, shorter time frame level, longer time frame level in the weekly kickoff low here. Taking a look at the 30-minute chart, settlement, okay. I want to kind of talk about what we did yesterday, what we were looking at yesterday. We opened with a pretty big gap. We had some pretty short overnight inventory. The overnight inventory did not crumble on this little move to the upside after the open yesterday. This little area here appeared to be a supply area. Once we could not close the gap relatively early, we always look for opportunities in the direction of the gap, which would have had us looking for shorts. We're in a similar situation this morning. Settlement is here, 118.73. We've got some continuing overnight shorts coming into this market. Again, yesterday, adding 1,800 on a down move, new sellers coming into this market, and now there's another opportunity for those sellers to really barrel into this market if they sense acceptance below this important inflection level here, 118.50. Gap rules, again, we couldn't close the gap yesterday. We did not have much success at closing the gap today, and we've got this inflection level here. Might be an interesting opportunity for us if we do see acceptance in volume, momentum, participation below that level for a continued move to the downside, and of course, be watching the dollar and of course the testimony today. The 10-year Okay, kind of okay uptick on this move to the upside yesterday as rates continue to creep lower. Of course, the price continues to creep higher in the 10-year here. Open interest indicates potential short covering. We lost 78,000 in open interest on a move that we ended up closing above a trend line. That's an indication that a lot of the shorts that have been piling in here finally got the idea that we may have put in a low for the time being, again supported by the close above this trend line. So some short covering here as rates continue to kind of fall off their recent highs. I'm expecting again more balance in this area than a directional move. I'll move above this kickoff high here would indicate a break in downside market structure and a possible move back to the upside. Now, do I see that as a high probability? Not really. Rates have been kind of creeping higher. I don't think that they're going to creep all that much off the highs unless there's something that happens that causes that, and I don't see right now what that's going to be. Take a look at the 30-minute. We opened with a gap. We closed the gap relatively early, taking us back into yesterday's range and value. We have another gap down below that, which might be interesting. Look at how long we got last night, and around midnight and into the London session, all of those overnight longs decided they'd had enough. They got out. Now market kind of taking us back into value and range from yesterday. Which, if we're not already in this downside move, we're going to try and stay patient and look for some sort of structure to lean on anything. We may be looking today at some longer time frame participation with the break of this trend line. No guarantee. And so, the short time frame I was saying this morning may be long. Not anymore. Not anymore. They've reconciled those longs this morning already. So, all right. So apparently, Angelina, you got you're in. And remember, you got to be in that room at 1:00 p.m. Central Time today. I'll look forward to answering any questions that I can. I don't pretend to know everything. Nobody does. It's one of the things I love about group coaching. Is it gives me a chance to learn something from you. So I always look forward to that. And yeah, Milan, I think you were talking about one of the markets we were going to be kind of chopping around in range. So Murph, thanks for helping out there. I was kind of in a pickle trying to figure out what was going on. Angelina, looking forward to seeing all of you there today. Again, at 1:00, we've got equities opening here in about 25 seconds. Take your deep breath. Stay humble, grateful, and creative today. Clarence, again, congratulations. That's you, Clarence. Yep, congratulations. Have a great trading day today. This is it for me for the week. I'm going to miss you tomorrow and Friday. I'm taking a couple of days off, but fear not. Dan the Man Hodgman, my younger, better looking, and smarter cohort, will be with you for the market forecast for the next couple of days, and I'll be back here with you on Monday. Don't forget, we have the group coaching today. We also at 3:00 have a basics of technical analysis webinar that Dan and I are both hosting. Looking forward to seeing you there, and have a great day today and a great rest of the week. Looking forward to being back with you on the forecast on Monday. Until then,